U.S. row crop condition ratings stayed record high last week, while spring wheat saw a huge improvement. U.S. corn is rated 78% good to excellent, up 1% from last week, but 11% above 2017. Ratings improved in Iowa and the Dakotas. U.S. soybeans were 73% good to excellent, down 1% from last week, but 7% above 2017. Ratings improved in the Dakotas and Iowa with rain, but were down in the rest of the region. Nationally, spring wheat conditions were up big this week, improving 8%, with the region also up from 6 to 9%. And the U.S. winter wheat harvest is ahead of normal, but hasn't started in the region, and conditions continue to slide. Joining us with markets this week is Frayne Olson from NDSU. And of course, we've had this big retracement in the grain markets due to fund liquidation, weather, and trade. And let's talk about that with these China tariffs. Have we priced a lot of this into the market or not, especially with the spike lows we hit this week?
The short answer is yes, we have. The futures market, their intent is to try and anticipate what would be the value as we move forward. They're taking all of the information they have in the marketplace, trying to come up with a reasonable estimate of what the value of corn, soybeans, and wheat would be, again, given what we know today in the marketplace. So the minute that information comes out, it's processed and fed into the marketplace. So yep, the trade tariffs that we're talking about have already been priced in. And
the value-added tax is already being traded, right?
Correct. And there's some question right now because China currently has a 13% value-added tax on soybeans coming into the country. The question is this going to move from 13 to 25, or is it going to be an additional 25? I think the market is anticipating that we're going to see it move from a 13% to a 25%.
So do you think that we will get a deal before July 6th, or is this going to be a longer-term impact?
That's anybody's guess right now. If I were speculating right now, I would say this is probably going to last longer than July 6th. I think the tariffs are going to take place. I think the trade is going to have to worry about how do we reshuffle the flow of grain within the world market. Given these import tariffs, what does it mean for U.S. purchases? So we'll have to wait to see, but if I were betting right now, I'd guess that we're going to have the tariffs come on.
I'm sure you've heard it, and I have too, Frayne, that producers say China has to buy beans. Mm-hmm. They need the beans, but the question is going to be at what price, right?
Correct. When you do the math on kind of flow of trade and the amount of soybeans in the world market that are tradable stocks, yes, the Chinese do have to come and buy some beans from the United States, but as you mentioned, it's a matter of at what price. Because somebody's going to have to pay that value-added tax. It's usually shared between both the buyer and the seller in the marketplace. But somebody's going to have to pay the tax. And even if we do start shipping to other locations, if we don't sell as many beans into the Chinese market, we shift into some others, in particular Southeast Asian markets. There's going to be some additional transportation costs. There's going to be some additional haggling going on to say, well, we know the U.S. has soybeans. Let's try and negotiate the best margin we can as a buyer.
And then will Brazil's infrastructure be able to handle the extra volume?
And that's the other big issue that a lot of folks haven't talked about much. With the increased export trade volumes, there's pretty good throughput capacity at the port level, but the infrastructure within the country to be able to get beans from where they're produced into the export terminals is really a question right now. And it's going to put, the higher volumes are going to put a lot of strain on their infrastructure. So it'll be testing those waters as well.
You say we won't get a deal July 6th, but when and if we do get a deal, will the market recover?
Yes, I do expect it to recover because, again, right now the market is anticipating we're going to have these tariffs and they're going to last for a certain time period. So if we do get a rebound, it won't probably be to the levels that we saw at the end of May, simply because it looks like we're going to have a pretty large crop coming and the weather is a portion of this as well. But we will get a rebound. Will that be a pricing opportunity for farmers? That's up to your cost of production and what your marketing plan currently looks like.
Does this do long-term demand destruction, though?
In my opinion, it doesn't. I do think that there's enough demand base. The U.S., if I were a Chinese buyer right now, I would want to have both the U.S. and Brazil and Argentina in my portfolio of customers and saying, well, I'd like to be able to play one against the other and try and make sure I got the best deal possible.
Well, we appreciate your time. Frayne Olson from NDSU, and you can hear our extended conversation at agweek.com.